Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, rate cuts are now seen as exacerbating inequality. But first, in the US, it's not only a month till the US presidential election, it is also earnings season month on Wall Street. Both will underline market sentiment over the period. American consumers are clearly feeling good about life and more carefree than recently. Consumer credit took a remarkable jump in August, boosting spending levels in a way we haven't seen in quite some time. The American unemployment rate edged up to 5% in September after a net 156,000 new jobs were created, and the equivalent number for the previous 2 months was revised higher. More than 500,000 people entered the jobs market in the month, raising their participation rate, and they are no doubt chasing wages that are growing at 2.7% per year, which incidentally is the fastest annual wage growth since December 2007. None of this takes the Fed rate hike off the table. Canada posted good jobs data too. And in Australia, their Treasurer has gone on record opposing more rate cuts by the RBA, arguing monetary policy has exhausted its effectiveness. Its ability to impact and influence is diminishing, he said. He told an interviewer over the weekend. He said instead, fiscal policy needed to do the heavy lifting to boost incomes and lift living standards. He's not alone in this change of heart. It is a view increasingly shared by other governments. Rate cuts just make asset holders rich and are counterproductive in dealing with inequality. Even Bill English is happy with the change of focus. And staying in Australia, the lack of houses for sale there in their real estate markets seems to have reignited their house price frenzy. Lack of supply is making buyers desperate. China is back from its Golden Week break today, and many analysts will be watching how their consumers and businesses view the future. Beijing's inability to show consistent transition signals is causing other countries to balk at some of their policy decisions. But they flip between policy choices, trying to keep the locals happy. Eyes are both on housing and equity prices this week. In New York, US Treasury 10-year yield ended Friday marginally lower at 1.72%. US benchmark oil price is a little lower too, now just under $50 a barrel, while the Brent benchmark is now just under $52 a barrel. The gold price is lower as well, now at $1,253 an ounce. And the New Zealand dollar is unchanged against the US dollar from this time on Friday. It's at 71.6 US cents. On cross rates, it's holding at 94.4 Aussie cents and 63.9 euro cents. The TWI is at 75.2. And I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.